Hello, and welcome to another update video about XRP. XRP is moving in a sideways range at the moment. That's unchanged from previous updates. Really, the overall context on the larger time frame hasn't changed, so I'm not going to show it in this video. We might be able to do that in the next one again. So make sure that you subscribe not to miss this one. However, here, we only want to take a look at the 1 hour time frame. The shorter time frame chart, and we want to understand if there is a chance now for a bit of a pullback there. We want to talk about updated support levels. We're going to move them together in this video, and we will take a look at the wave structure and potential risks and opportunities. So also we're going to talk a little bit about structure, strategy, okay, and what could be reasonable tactical considerations here in the current wave structure, where we, depending on where we are actually in the cycle. Now, looking at this, I think it's clear, I talked about that in previous videos, that we are likely going to see one more high. At least that is my expectation. What I need to do, I need to shift this support area a little bit to the right. That's our lower support area for the blue scenario. And I think maybe we should talk about that first, because in previous updates, I shared with you that we should see at least one more high, at least based on what I see in the chart right now. I have no evidence at all that a substantial price top has formed on the XRP chart. So upside is possible still. Yeah, there is no impulsive decline. That's very important to understand, because without an impulse to the downside, there is no confirmation that a downtrend has begun. There is no break of support either. So yeah, the idea is still that we go higher. What could happen though is a short-term downtrend that is going to target the lower, let's say the lower target zone, the lower support zone here. That would require further confirmation though. First of all, a break below this upper micro support, which we might need to adjust slightly. So spoiler alert, it's now $2.09. So we first would need to see a break below $2.09, but then also a break below this swing low, which is quite important, from the 20th of December at $1.95. So any break below $1.95 should confirm the blue scenario and should indicate that we are likely going to test this lower support between $1.80 and $1.39. Is that a major problem? I don't think so. I think it would generate a lot of panic because we would break back below the 2021 high, which was also a breakout point. The price broke out to the upside recently in December, formed another high within this scenario, obviously. And breaking back below this critical breakout point could indicate some weakness. It might create some panic, but from an Elliott wave point of view, it wouldn't be such a problem. Still, of course, it would open the door to a deeper correction, right? But what my view is that any break below $2.09 followed by a break below $1.95 will shift the focus to this lower support area. It means the triangle would be invalidated, at least the triangle as I'm labeling it right now in the yellow scenario. And yeah, we should then see the price go into this lower support region, which would still be in line with the overall larger degree assumption that we could get another high eventually, but it means a deeper correction is unfolding beforehand. But as long as we are not even breaking below upper micro support, this here remains an alternative. So let's talk about the yellow scenario now, which I am following primarily, which has unfolded, I'd say more or less as anticipated, as a triangle. Been tracking this triangle now for 2 weeks, a bit longer maybe, I think 2 weeks. And this triangle is considered a wave 4. So wave 4 structures can be triangles. If it's a triangle, it's not the last wave of a cycle, but there's typically at least one, well, there should be only really one more move up to complete a larger degree pattern. That's what we know about triangles, okay? Now, the triangle is an ABCDE structure. A wave down, B wave up, C wave down, D wave up. And there could be one more higher low in an E wave before we go up higher. So it's an A, B, see the E pattern here that we're tracking. And this E wave is located, well, the support for the E wave is located between $2.09 and $2.29. Now, please note that an E wave really does only have weak support. It doesn't really have targets. It can sometimes be very short. It can sometimes be very deep, but it shouldn't break below 195, which is why I called that out as critical confirmation level for the more bearish scenario. But yeah, I mean, ideally, the price would hold $2.09 in any pullback and then find support before breaking out to the upside. There are, I think, two main levels to watch. The $2.09 level, which is the key support of the orange box. Doesn't mean we have to test it, but really, ideally, the market should not break and sustain below it in an E wave of a wave 4, and the E wave would be the last wave of the triangle. And to the upside, the green line at $2.72, because this is the upside breakout point. Okay, this is the level that would confirm an upside breakout from the triangle. In the very short term, I mean, I could already call that a completed C wave. It's reached targets. It could very well still stretch a bit higher, but remember yesterday we were watching for one more high, and I pointed out probably the trend line could act as some resistance. The price did get there. I really don't have a reliable micro count here, but the choppy and overlapping nature of the move up here on the micro level would be a warning that a pullback is due, and it doesn't mean it started, but it means an E wave could happen from here, right? Now I can't tell you we've topped or anything, but I think the risk is now getting higher, given that we've moved from lower support, well, let's say the lower range boundary of this range, to the, well, resistance and target area on the micro level at least, yeah? So that means, in summary, I'm tracking primarily the yellow scenario because as long as we're holding above upper support, which is between $2.09 and $2.29, there's no evidence for the short-term bearish blue scenario, which, however, would be still part of an overall bullish case. The $2.09 level is key support for the yellow E wave, even though a brief break below wouldn't be a problem. $1.95 is the invalidation point for the yellow triangle, and an upside breakout point, which would confirm from an Elliott wave point of view an upside breakout from the yellow scenario, and could indicate obviously a test of the December high and then the all-time high. Well, that level is $2.72. And as anticipated, the market pushed a little bit higher to test the upper boundary line of the triangle. But there is still no sign of a top in place locally, right? So we could still stretch a little higher. And 254 to 262 is the next micro target range. That's the update about XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. If you are interested in the membership, feel free to check out our channel page. It explains everything for you. You know, there's a 2-minute video that explains the membership. As a member, you get access to member-only updates. Covered yesterday, AR, ARB, Atlas, Atom, AVAX, the days before, Phantom, Render, Casper, and so on. You also get access to our weekly live stream. It's covered, once a week, every Sunday, 5 p.m. UTC. And as a gold member, you even get access to our Discord server. Thank you very much. Bye-bye.